Hello and welcome to Weekly Open. My name is Brian, here with Don and Cred for the first time in a hot minute, but we're happy to be back. Cred, you're on the left. How you doing?
Yeah, we've missed a few shows, but haven't missed much in terms of the market. So
Yeah.
I hope we can be forgiven for that transgression. Otherwise, doing well. How are you?
I'm doing well. I feel like we took our summer break at a perfectly fine time. There's nothing to really miss. Don, how's it going?
Good. I mean, market-wise, super boring, but we just entertain ourselves otherwise.
Yeah.
So all good.
I assume everybody had a pretty good few weeks off, and apologies to the audience. We didn't give you any warning about that, but you know, this show's free. The weekly candle is, I mean, legitimately, I think it's in the same exact spot as we last recorded. Don, I see you have shared your screen. Do you want to give us a little bit of a rundown of where we are, and then we'll kind of talk through what's been going on and what we expect?
I mean, if you look back to the last stream we did, that's exactly where we are. Nothing's moved really, but I can still go over it given it's been a while. So on the monthly time frame, literally didn't really move. We have basically, I mean, it's going into the 5th month now where we've just been stuck at this 28K, 29K level. And it's still in the middle of nowhere, right? Like we still have resistance above us and support below us, and we're still smack in the middle. So that isn't really helping. Like if we was chilling at support or chilling at resistance, that'd be one thing, but we're in the middle of it. So there's really no high time frame kind of signal that we could get here other than just, okay, it's consolidating. The move up to me hasn't been significant enough that I would say, hey, this is bullish consolidation. If anything, it just looks like we had a massive move to the downside, and then we had a little bit of a bounce. And I mean, could be the bottom, could not be. I mean, I still think 16K is the bottom, but that doesn't have to immediately do the typical kind of bull market thing where you have a move up, sideways, up. This could just be like okay, you moved up, you went sideways, you retrace a little bit, go up, go sideways for longer. I don't really have much hope, honestly, that this kind of sideways choppy situation will end anytime soon. I think it's probably going to continue for quite a while, but could be wrong on that front. But there's no real signal on the monthly, and then you go on the lower time frames, right? And the weekly gives you signal, but it's a bearish one, at least to me. We failed to kind of come back into the bull market range that we had. We were consolidating between 30 and 60K ish for quite a while in that old range, broke down, retested the range low roughly twice, right? You could argue that this front ran it, but here we got close enough that I would say this is a bearish retest of sorts. And so far, we haven't been able to push back into it. And not only that, but we've also failed to hold support, right? So we had a little bit of a green candle in here. For me, that was resistance. We got a little bit of a new spike above it, but that didn't lead to anything, right? And this is something that I look at when I judge the strength of a market, whether I want to be like bullish or bearish. Our news, like our bullish news and objectively bullish news, doing something good for price, or are they not? Same works on the other side, right? I mean, I was bullish at 16K because we got the worst news imaginable, and it never stopped, right? We got like never-ending bad news, and price just refused to go lower. And now we've been getting never-ending bullish news, I would say, and price hasn't gone higher. So for me, it makes sense to lean on the bearish side of things. But this is mostly chop right now, right? And I'm not going to change my stance on that until we kind of reclaim 30K on the weekly time frame. Seen a lot of people get kind of chopped up on the lower time frames just because, and excuse my scribbles here, because we've had a few days where it went up 2%, right? like we've had a little bit of volatility in the sense that the price has moved.
All those wicks.
But it's not really moved anywhere interesting, right? Like it's just been getting stuffed by resistance every single time. And realistically, right, like if you take the midpoint of whatever this is, you could argue like that you have a range here. Could even, I think Cred has it like this. I actually like it better. My screen just nuked. Give me a sec.
I can still see your previous.
Yeah, I wonder what that was.
We'll figure it out. Cred, have you been diddling in the middle?
What do you think, mate? Like, absolutely not. No, I think I can screen share very quickly as well to add some color. Let me do 1 sec. Yeah, I'll do whole screen. Why not? There we go. Right, can you see this?
Mm-hmm.
Yeah, so this is via Velo, similar to Coinalyze, just one of these data aggregators. This is the Deribits DVOL implied volatility index. You can kind of just see what that looks like.
Miserable.
This is on the daily time frame, and just look at the trend of this thing. Just absolutely miserable, just straight up a non-starter.
If you want this near all-time lows?
I think it is all-time lows, depending on which index you use. Yeah, this is pretty much the worst volatility. I think it is objectively the worst volatility we've ever had in majors, certainly BTC. This is what it looks like via the blocks DVOL index. Haven't looked. Oh yeah, well, probably the same thing. It looks like, but this just shows you the trend slightly clearer. This is from March, for example, and I mean just completely unprecedented levels of misery in the vol market. So you really have to ask yourself, if you're trading the majors, what on earth are you doing, and what kind of rotations are you going for, and is it worth it? From a counterparty risk point of view, and also from just a fees point of view. Like, are the rotations big enough to pay you anything meaningful, even if you somehow catch the bottom and sell the top, and vice versa? It's just pretty much been a non-starter in that regard. And also, because we're also broke and we're squeezing water from rocks, this is also applied to pretty much all the vast majority of the high cap altcoins. Like, we've definitely run out of money to push around BTC and ETH, but in the past we'd kind of cope and be like, okay, we can't move BTC. And by we, I just mean the market collectively, right? It's like, okay, BTC is like too liquid and expensive to push around. ETH is less so, maybe we'll go there. Okay, if we don't have the money for that, we'll start with some of these altcoins and work our way down the market caps. We've sort of crossed ourselves out of all three categories. So BTC hasn't been moving, ETH hasn't been moving, and anything on a centralized exchange, really, aside from some dodgy market maker coins without naming names. And even those have just been very pump and dumpy, like massive divergence between spot and futures. Spot gets dumped and the whole thing gets retraced type of thing. So yeah, for centralized exchange traders, just absolutely miserable landscape. And there's no point almost mincing words about it, you know?
Yeah, I'm impressed. I think looking at the volatility in that way is good. I also always, for whatever reason, go look at if you have looked at Bollinger Band width in any time of late, but it kind of reflects the same type of story.
Yeah, it's at so low at the screen that you cannot even see it.
Yeah, I have to do the old trick where I move us to the right. But if people can see on there, Bollinger Bands are a measure of the same type of volatility, but it's probably a little bit different output. But we had this 2012, 2016 level that we're below that as well on the weekly basis, which I think what I'm amazed by is it's lower than November 2018 when it was the 6K like forever pain. And then even on a daily basis, when you scroll back on the chart to those same levels, it matches on both daily and weekly all-time lows. I'm very impressed.
It's so bad. Also, it's not like there's been a shortage of news. There have been plenty of sort of headlines either way. Some are chain specific, some more industry specific, and that hasn't cut it. So that in itself is pretty sad. I think at this point it would take pretty much, just very big news in order to move this thing, because even the midterm stuff, which in the right market conditions would push us around either way, is having zero impact. So I think it's like ETF news or something really, really bad. And aside from that, God knows, maybe someone grows some balls and crosses the spread, one of these big players, big desks, whatever, funds. But at the moment, it's just not happening, and it hasn't been happening.
I remember all these previous times pretty well, like, you know, the breakdown from 6K, even the move up after consolidation, right before COVID stuff happened in December 2019, the breakup from 4K. Like the DeFi summer was in here, you know, while Bitcoin was doing nothing. DeFi summer happened, and then eventually, you know, Bitcoin ripped off of that fall of 2020, and that really started all the big mania. I remember those periods of low volatility very clearly. The best we've mustered so far with this period of low volatility is a broken Buy Your Friends app. It's kind of sad. Like, I feel like there should be more random other stuff going on. What do y'all think about what the markets are telling us, like outside of Bitcoin, since clearly nothing is going on in Bitcoin? I mean, the volatility shows that. Are you surprised that there's not really anything going on anywhere else either?
Yeah, I mean, the price is relatively decent, right? Bitcoin at 30K. I don't think anyone's complaining about that too much. Especially considering the kind of year we had last year, right? Like, I think Bitcoin at 30K is more of a surprise to the upside than to the downside. But yeah, we've not been having too much interest in crypto as a whole, which is interesting because a lot of people have moved in the last few years, right? Like, I've read a bunch of kind of surveys where over like year over year, like it just increases the percentage of the percentage of people that own crypto
who are active.
I don't know if they're active, but a bunch of a lot of people actually own crypto now. It's more than 10% of American population, as far as I'm aware, which is completely different from what we had in the past, right? So you would think that given a lot of people own this stuff, they'd be willing to kind of like have a little bit of fun. But right now that doesn't seem to be likely. And I think the reason for it is because the traditional markets are just way more interesting, right? Like you had Facebook or Meta or whatever you want to call it, go completely crazy during the time where Bitcoin went from like basically 16 to 30K. You had Meta outperform massively. You had all the AI stuff. You had like the traditional markets basically going wild. And
I mean, even the S&P index, it jumped the gap. Like its equivalent was around here, you know, that consolidation around 41 to 4,200. It jumps the gap and is like near all-time highs. And Bitcoin failed to follow through. So yeah, we got left in the dust during all this upside here.
Yeah, and I think it's like one of the reasons is that it's quite easy to jump in and out of crypto now, right? Like when you think back, like it was such a headache. Like if you had an altcoin, you had to sell into Bitcoin, and you had to move from Bitcoin to, or like even more so, like you had to sell like your shitcoin into ETH and then your ETH into Bitcoin, and you had to off ramp in any way possible. And nowadays you can just like see Bitcoin. Yeah, you just see Bitcoin in your Robinhood account being boring, and then you just sell it and you move to stocks, and that's that, right? Like it's been getting more and more easy to just kind of trade whatever market you want to trade. Like 10 years ago, just jumping into random shitcoin stock basically seemed pretty damn difficult, right? Nowadays,
it's a really good point,
that
lock-in component, you know. We have at a micro level, we have the same kind of thought process about when people bridge to like a layer 2 or an alternative layer 1. You might bridge for a reason, and then you're like, okay, well, I already did this. I guess I'm going to play around over here. And yeah, in your scenario, this greater access to assets makes it to where it's a little less interesting. Do you think this has anything to do with, maybe I'm reaching, but the spreads reducing a good bit on GBTC and ETH, that even if you are to do something, why not go after the thing that has a 30% plus discount?
Yeah, but I think partially yes, but I also think a bunch of people, like, because I've seen a lot of rumors kind of floating around, and I'm not sure if there like any substance to it, but there's been rumors floating around that like the case is basically going to be we won against the SEC, and then like people are just like getting hyped on that, and they're like, oh, 30%, I can take that. I think it's like a mixture of both. Like some people are just like, oh yeah, I can take advantage of this, and it's not that hard to jump in and out. But I think a lot of people are just also just chasing the rumors basically on this one.
Yeah, I'm not trying to indicate it's the whole story, but I wonder if that does make it a little simpler, you know.
Yeah, but it's definitely better if the discount, like the lower it is, as in like you definitely don't want to hang around the 40% mark, right? Like at some point this needs to close.
Yeah, I find it interesting because I own ETH, and like even if I had the choice of owning ETH in those accounts, like I wouldn't because I like it with this discount. You know, I feel like the discount's wide enough to where I can anticipate that spread narrowing. Cred, what are you thinking?
I'm not thinking anything, mate. Honestly, yeah, I still think at this point, sort of narratively or catalyst-wise, I mean, the Bloomberg analysts have been revising their approval odds higher and higher. It went from like 1% to 15 to 50 to 65 now. And I think one of the core arguments was essentially what Don was pointing out, that if there will be there's likely to be an approval cascading effect if Grayscale wins their case against the SEC. So you're kind of hoping for that, really, because either that or the opposite of that, which is like a big defeat and rejection/denial of the more pertinent ETFs. Like I saw some commentary suggesting that focusing on the ETF doesn't make much sense because ARK got delayed and the market didn't really care. But I disagree with that. I think most of the participation and open interest and in general the bullish argument is predicated on BlackRock specifically, or things that affect BlackRock. So that's probably from an ETF point of view. I think the market expected ARK to get delayed, and price action sort of supports that. But I think if we get something else with regard to some of the bigger applications, the more important ones, be it the lawsuit of Grayscale or BlackRock itself, that's probably a decent volatility catalyst, because we seem to be completely immune to everything else. But even then, like that's a hard argument to make now, because there's a really good chance, or at least a good enough chance, that if we get that type of approval news, green light, whatever, that the move is going to be large enough, and the amount of unwinding and the cascading effects of that you don't have to long before it happens. I mean, yes, you might have more P&L or whatever, but those are the types of moves that if you're somewhat at your desk, you expect them to be trend-forming moves and multi-day moves at the very least. So if that's your bullish argument, you don't have to take that argument now. You could just wait. And then if that argument appears, there's probably enough sort of momentum in this thing. And, as a result of the volatility constriction we've had, that there'll be enough follow through in order to make some money, rather when it's true, as opposed to speculating that it's true and then, bleeding out into chop instead. So I think even if you take the most bullish view from a narrative catalyst point of view, that we're going to get a cascading effect of approvals, I still think the better argument is to wait for it to happen and trade it, rather than hope it happens and trade it without knowing, if that makes sense.
Yeah.
Do you think we could be doing the same thing again? Like, the halving is now within visible distance, I guess, and the ETF stuff seems quite real. Like, are these real bullish catalysts that'll create like natural positive influences on price, and we're just ignoring it?
I mean, possible, yeah. The halving, I think, is gonna help, but it's not gonna like make a big difference. Short term anyway, I think. But yeah, if the ETF gets approved, I think that could kind of lift Bitcoin from this whole I mean, we've been kind of getting completely wrecked by the S&P in traditional markets, right? So I think that could kind of push us back on that, as in like Bitcoin finally goes up without the S&P going up, or doesn't go down as much if the S&P continues to go down. So I think that's gonna help, but I don't know. For me, it's such a weird situation right now where we've had a crazy COVID period, and then we had a crazy after COVID period, and I think all of that craziness just gonna basically be resolved by boringness, right? Like we had the craziest markets in years, and I think now we're gonna get the most boring markets in years. But maybe not. But that's kind of my take. Like, even if the ETF is approved, I could see us like go up, and I mean, I think that would lead to quite a bit of upside. But then I could see it just return to boring again, and then you get like a little bit of a kind of walk up, but a slow one.
We could jump that gap and not make new all-time highs that everybody's screaming for, 10x's and whatever, $500,000 Bitcoin, and the ETF takes us into a new range of between 30K and 60K where you like to be.
Yeah, I think that's how I would like, if the ETF gets straight up approved, I could see us go like pump towards like 40K in one go, and then I think it would kind of bleed out a little, and then it would just be sideways and start drifting higher. And then you can go and run towards 60K after a while. But I think the markets in general are just have been so crazy, and yeah, I think it's gonna need to cool down in general. And I mean, we've done a lot of that in crypto specifically. We've been more boring than the S&P, but I think even the traditional markets need to get a little bit more boring in the next few years.
Historically, though, crypto people find a pathway to volatility. So if this lack of volatility continues, like, where do the degenerates go?
Well, on chain appears to be the answer, right? Not even in a snobby way or anything. That just seems to be the play. Now it's easier than ever before to trade on chain. There's a ton of supporting software and infrastructure now that didn't exist before. It's just more popular and more normalized now. The barrier to entry is much lower, and especially if you're incentivized to do so, given that anything on a centralized exchange just isn't trading, that seems to be where these games are being played. So I mean, it's good, right? It's a natural answer as far as where to go. It's like on chain, you're in crypto. It's sort of there's some synergy there that makes sense. But given it's not in my trading wheelhouse, I just have to stick to my tired old watch lists and watch them not do anything, which is upsetting.
What do you think, Don?
Yeah, I mean, the whole on-chain thing, like, I agree, like, that's where the action has been, but it's also been like tiny market caps, right? Like, you've seen a bunch of
it's
people,
not even
like, some of the stuff that I see talked about, basically I check how much they're worth, and I'm like, what the fuck? Like, you have people with, I don't know, 200, 300, 400, 500,000 followers on Twitter shilling like stuff that has 1 million to like maximum 10 million market cap.
Yeah, we need a Twitter follower to market cap ratio.
Dude, that's
stuff.
Yeah, I think you're being generous there, Don. There's people with more followers than market cap.
Yes. And I'm like, what the fuck is this? Like, at some point, like, there has to be a limit. But apparently there is no limit.
FTV $100,000, plus or minus 2% move, $500. Then like somebody with 100,000 followers tweeting it. I'm just like, what in the world?
Yeah, so that's kind of like the whole, like, you can tell that there's very little like money floating around, and you can also see this, and we've talked about this before, when you just look at the amount of stable coins in the market, right? It's been continuously going down, and I think that's bad news, right? That's what you don't want to be seeing, but it's the only logical conclusion to basically getting less yield in crypto than you get it in the traditional market. So I think a lot of people are just kind of looking elsewhere now, and they're not willing to take the risk in crypto. And why would you, right? Like, why would you take the risk of having your money on an exchange or on chain to get like 3 or 4% if you can get like 5-6%, basically, in comparison anyway, risk-free, right? Like, it's not risk-free, but it's, comparing it to what you get in crypto, it is basically risk-free, right?
I can't
say
I think that will last, though. But while it does, these doldrums of like the only volatility you can find is when you're like, oh, I need to go invest in Pinky Chain Inubot. Like, I'm not interested in that. Like, I don't like that game. It's not the future of France, in my opinion. And so, like, the places I do feel like I'm willing to keep money and whatnot, like, people just seem to not care. But I guess some people are winning. That can't be very many because of the pure dollars that you're talking about. Like it's just not enough. There's not enough dollars out there.
And also, like, a lot of the stuff that is getting shilled is just plain rug pulls,
Oh
right?
yeah, like
So yeah, and then you have like it's not like there's new people coming into crypto to trade these things, right? So it's old money in a pool trading. Some of them make money, right? Some of them lose money, and then you have the rug pullers taking continuous money out of the pool of money that is available. So basically, like, if you just think about it logically, if there's no new money coming in, it's just a bunch of people basically losing money over time. There is obviously always a handful of people that make some money, but it's not like there's anything like that is. There's no real money inflow that at least I can see. Then again, it's not really my world. I don't trade like that at all, so maybe I'm missing something.
Before our time, there was the super OGs that talk somewhat fondly about like the days of Mint Pal. 2014, the market really was not recovering by any means then, but volatility was low, and they went and traded obvious scams and then it was various sorts of Bitcoin clones, and they knew that like the timeline for their 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 time in a trade was very short, like days, if not hours. And this is the most similar it's ever felt to that for me. Um, I haven't talked to Kobe or whoever else was around at the time to see how similar it was, but it just feels that way. Um, they couldn't have really known or cared what they were in at the time, and just were playing the market itself, whatever winds of the market existed on sketchy exchanges. And I feel like we're doing the same thing now on sketchy chains.
Yeah, it's an odd one, and I mean, to me, and there's some place to be made, but to me, it's just the best thing to do in these kind of situations. And this is very personal, whatever. Like, it doesn't have to apply to everyone, but to me, it just makes sense to take time off, recover from the craziness, make sure that you kind of actually feel like trading when it gets more active again, right? Because what I see a bunch of people do is they trade this daily range. And then, like, if this thing rips like 5% because of the ETF approval, and you're tired because you've been trading this nonstop, I mean, you're gonna lose so much more money in opportunity cost than you could have ever made in trading this kind of shitty range. And then the same with like all of these like rug pulls and stuff. Unless you hit it nicely and unless you're really good at this game, losing money when it's this boring is some of the worst things you can be doing, right? Because then you don't have it to use it when the market gets more volatile. So I don't know, like, to me, it makes the most sense to just be a little bit patient, enjoy life, and come back to this market. Like, you can still trade other markets, but come back to this market once it's actually interesting again.
Yeah. And we are getting a little bit of trolling for being boomers, and I think that's fair. I think it's worth noting, though, like, one, participating in this market to the degree of you are one of those people shouting from the rooftops about 100K cap coins, like, I don't know. I tend to think like that type of stuff is remembered to some degree, and it's not the best use of your reputation. Um, but even if you're going to play it, like, don't play it with so much that you lose the big picture. Every year I've been in crypto, you see people that end up getting lost in the fray of the minutia of what's happening right now and fail to remember like whatever their original thesis was for why they got involved in all this. And it's also like so easy for your stack, if you will, to just oscillate, and you think you made it because you hit this, Unibot or something, like you hit 100x, and then now you think you're smart, and then you go roll it over and you lose it all. And a rug pull, it doesn't even have to be a chart or like something just goes down. It's literally the liquidity goes away and you're stuck, and you went in with your full stack because you talked to the developer on Telegram or something. And I don't know, I just think that people can get blinded by a short stint of success. And if you are playing those games and you're winning, good on you. Like that's what the market is. But I would encourage people to keep an eye on the big picture at the same time.
And I mean, for what it's worth, like I have a friend that basically only ever plays the low cap garbage coins, whatever stuff, and he's been basically consistently losing in the last few months, trading on chain, doing all that stuff, and he's been having success over the years, just doing exactly that. So it's, even if you're kind of experienced, doesn't mean you have to be winning, especially like I said, if there's limited liquidity going around. But yeah, there's obviously like Unibot, and there's always gonna be one, right? Like I still remember during the bear market, I was like, hey, I think it was 2000. Was that? I think it was at the top actually, like of the last time. I was like, we lost 60K, but I could be misremembering. But I think this was here. I was like, we lost 60K. It's time to just kind of chill a little bit. And then I got a bunch of comments being like, yeah, but I mean, Hex is gonna go up, right? Like, because it's been going up in the bear markets, and it's like cool, but that's generally not how it works, right? And even if you think like you figured it out, most of the time, like if you actually think you have it figured out, you actually don't, and that's the time where you get completely wrecked. And I mean, the Hex people did get completely wrecked.
What we didn't realize is Don said it's time to chill for a little bit, as in 6 years.
Maybe.
Cred, what you thinking about over there? You're awfully quiet.
Sorry, I sometimes forget that I'm on this show, and I'm like, I listen to it as an enjoying audience member, and then you say my name and the fourth wall breaks. No, I agree with all of that. I think sometimes it's very tempting, especially on a hot streak, to think that some of the older rules don't apply. Like I got really tired of hearing, oh, why do you even look at BTC and ETH when my altcoins are up 10 zillion%? And all these fund managers being like, oh, why do you use BTC to figure out where the market is when Chili's, Luna, and whatever else shitcoin are clearly doing so much better? And the market cycles through these people, and they themselves end up being quite recyclable. I think it's just important to know the regime you're in and then know what you're good at. If you can have a decent grasp on those two things, you'll be okay. In terms of regime, I know that it's sort of very PvP, low volatility type of thing. In terms of what I'm good at, or used to be to some extent at least, is BTC and ETH high time frame trading. And if I don't have, and intraday to some extent, but definitely high time frame bread and butter. If I'm not getting any signals on those and volatility is dead, I'm just not going to have strong views on the market. And I also don't necessarily think it's the best time to retrain into other disciplines. I mean, maybe you can dabble from like a tourist point of view and sort of poke about on chain and gain some experience that way, or look for new setups or trade alts you wouldn't normally trade. All of that is fine, as long as you don't sort of fully pivot and make it your own, your new thing. I think having some sort of, and I know it's going to sound controversial, whatever, because of the whole adaptability thing, but having at least a broad identity as far as trading goes, in terms of what you're good at, I think is generally helpful. And this regime is rewarding to a very, very small number of people. I mean, maybe the market makers that are active plus vol sellers, it's been good for them, but everyone else has been eating shit. I saw some commentary suggesting that PvP markets don't exist and it's just people complaining, which to me is a ridiculous premise. Because if you're looking at outflows and volatility and volume, if your argument is that none of those things matter and the market is always the same, then it's very hard to have a balanced discussion with someone with those priors, so yeah, that's my view there. And if you're doing well in these conditions, I mean, that's awesome. I wouldn't be able to do it, but just don't take it for granted is what I'll say, because these things can change very quickly. So if you want to play defensively there and you're outperforming by managing to grow your stack significantly during this period, just still have a forward-looking view that I'm going to be able to multiply this in a much less predatory, more meaningful way when the regime shifts to something more favorable generally. Just because it's like this now doesn't mean it's always going to be. So you can build up like a nice capital buffer and deploy it during generally more favorable market conditions. That's, to your credit.
I think for every one of the people that's like had some success in these types of very low volatility PvP markets, as you mentioned, there's like 100 or 1,000 that see it and are tempted by it. And then don't have the same success even if they make the jump, or just like can't be bothered. And I don't know, I don't know which one's smarter. Probably the can't be bothered. But at some point, if you hit one of those, then that's great. But like, I really do think it's a significant minority, and then that minority gets very, very loud, which gives peer pressure to the others, and off you go.
Yeah, I mean they're also incentivized, right? Because we keep talking
They
about
need
like
someone to
how
buy their bags.
yes, exactly. And I mean these market caps are low enough that if you can convince like 100 or 1,000 people to buy your bags, you're gonna run off like a bandit with your 2x, 3x, 10x, because liquidity is kind of garbage. And then like you said, like someone has to buy $500 and the thing moves like 5%. Just need to convince the right person of whatever the fuck you're buying to buy also. So like it's always a little bit tiresome because I get this a lot where people are like, oh, you should be trading this, you should be trading that. But I mean, like Cred said, you have to have like an area of expertise, right? And you have to have at least some rules. Like I can throw an ETH at this and I can throw an ETH at that and have some fun. But I'd rather have fun playing video games and just doing proper market things when the market is actually rewarding me to do it. And there's actually like just a lot of things to do, right? If there's only one big winner that I can pick out of like a million, then that's not necessarily the market that I want to be trading. I want to be trading the market where even an idiot like me that doesn't understand anything, right, can just hit by blindly throwing a dart. Because then no matter what dumb shit I do, the end result is me making money, right? Even if I underperform, if I'm just patient enough and wait for that kind of regime to come back, I will be okay. But if I kind of think like, hey, I'm the genius, I can be the one person out of 100 that makes money during this shitty trading period. There's a good chance that I'm just not that genius, right?
Yeah, I think
And
that's a really good point about throwing the dart. Like right now, it's definitely not that regime. It's the regime where 100 darts are thrown, 5 hit the board, 2 get kind of close, and 1 hits the bullseye. It's not everybody makes money.
yeah, but I mean, the problem is, right, I wish I could say like, hey, it's gonna get better. I mean, it is gonna get better eventually, but I don't like I'm not feeling that it's gonna get better soon thing. But then again, we have enough catalysts to kind of make that happen with like if the halving narrative for some reason picks up and doesn't fizzle out like the Litecoin one, right? I don't know if you've been following that ledger, but that's been an interesting one. Litecoin halving was basically the top of that. It's been down only since.
Well, I think for me at least, I just think Litecoin's pointless. So the pre-halving narrative is all that there is, because there's less like real demand
Yes.
for Litecoin, whereas I think for Bitcoin it does have an opportunity to act a bit differently. Although I do think there could be some short-term pullback of sell the news type of mentality should Bitcoin pump into it the way Litecoin did.
Yeah,
but I think eventually it would have some impact on Bitcoin.
I think Litecoin also, like I've been making this comparison because I think like on like a pretty surface level of just thinking, like it's pretty similar, right? Like just like the rewards are halved, like it's not like that's too different. And Litecoin market cap is so much significantly lower than Bitcoin's is. So like even if it's irrelevant, like the effect should still be felt. But I think the one of a good argument that I've heard why the Litecoin halving is gonna be bearish. This was like a couple weeks ago, before the halving actually, was because it's actually getting quite unsecure, right? Like it's getting insecure, whatever, just based on the fact that the rewards are quite
Block
low.
rewards suck.
Yeah, so it's like,
Which is the same critique people give for Bitcoin eventually.
yes, eventually that's gonna be, as long as ordinals and whatever other people come up with on the Bitcoin network doesn't pick up, you'll have the same problem there too. But that's one of the good arguments I've heard why the Bitcoin halving is gonna be different to the Litecoin one, just based on the fact that you don't have to be worried about your chain getting attacked as much because it's so much more expensive. But yeah, I don't know. I think there is catalysts for this thing to move, but we've had a lot of catalysts and nothing has moved. So
for what it's worth, on that same front about rewards, the hash rate market is absolutely betting on the rewards continuing to be worth it. The hash rate is moving basically at all-time highs. Um, there's something dropped off a little bit recently, but I don't think it looks irrelevant relative to the full chart. And the dispersion between hash rate, and price is massive, as big as it's been since 2020. In fact, I think bigger. This chart kind of sucks that I'm looking at, but yeah, I mean it's pretty interesting to see what's going on there. So people who are putting metal into the market through mining apparatus are certainly happy to make that bet. And yeah, I don't know. I haven't seen as much. Maybe I just ignore them now, but I haven't seen as many of the on-chain whisperers talking about this
Talk
kind
about
of
it,
stuff.
yeah.
Yeah.
I mean, part of it is ordinals, right? Because you get more money. But then again, ordinals have dropped off significantly, volumes.
Yeah, I think that's too much of a micro narrative to really influence hash rate. Do you think?
I think it had, like, at least for a while, like, volumes were quite high, and then it actually had quite a significant impact on what you would make, as far as I'm aware. This is definitely not my expertise, but from like the chatter that I heard in chat groups and stuff, there was more money to be made. But yeah, I think that's dropped off now, and I don't think it's as significant. So I wouldn't necessarily be like the one that just says like, oh yeah, it's all ordinals, because that's definitely not the case. There's something else going on. I wonder what it is, because like you said, it is a little bit of a big, like, it's not a little bit, it's a big divide between price and hash rate. We haven't had that before.
Yeah.
It's fine. We just rescued the hourly candle on BTC. So
Yeah, I
drop
saw
down,
that.
boys. See you next
Oh
week.
yeah, we've had a 1% move. Biggest move of the last 5 weeks.
Good. I mean, I don't want people to get too distracted from what I'm saying. Like Don gave the narrative of the market. I'm probably more bullish than you guys are. I saw something really funny recently where somebody was talking about how it seems like the Europeans are always the level to level range traders and the Americans are the perma bulls. And on this show, I think that definitely fits. Like I just tend to be more inherently naturally bullish. I think for better or worse.
Well, yeah, it's because you have the S&P. We have like the FTSE and the DAX. You know, it makes total sense, sort of sociologically.
Yeah, maybe so. I still get relatively excited when I think about the overall, recovery that crypto's had off the bottom, not in the recent months. But then I don't know. My temptation is to look at this as a bullish consolidation for ETH and BTC. I like the ETH chart better. Have for a while. It's not really benefited me at all, but I don't know, for some reason it tickles my fancy a little more. I don't think it's unreasonable to think that we do follow the S&P, and if the S&P doesn't like just instant nuke off of some kind of bad news, I don't think we're hardened enough to just moon while the legacy market tanks. But if the legacy market chills, I think it does give us room to follow, the same way that there's that relationship sometimes between, say, Bitcoin and altcoins, where Bitcoin slows down after a while and people start looking elsewhere. Perhaps some of the people who have sought risk and found it in legacy markets go down the line, and within those markets, there's a great dispersion in legacy markets. The S&P is, at some crazy price, but if you go look at the Zoom, or I'm just thinking of that one randomly, but like the COVID names and stuff, the market was very wise to these. Like they did not recover. The memes of the legacy market did not recover. It's largely the largest caps, the real money makers, things like that. I think crypto might have a chance to do really well if you also start to see some of the, like, not necessarily Zoom, but like some of these names in legacy markets that did really well during COVID to start to recover, and that also might signal, maybe it's time to risk off a little bit in that space. But anyway, I would like to see that happen if we're going to have a big move in crypto. But I'm not like particularly bearish or anything here. And the longer we sit here, I think the better chance we have of an impulse forward.
I'm not really hating on it. One thing that I do like to see is the GME price been continuously going down. Kind of looks like it did a monthly bearish retest and it's kind of heading lower again. And that's been kind of my indication of how just the biggest idiots basically behave in the market. And if they're losing money, I think that's good, especially if price moves up, right? Like with the S&P going up, if the complete and utter like apes basically lose money, that makes me a little bit more reassured that we're not at kind of like complete mania levels of craziness. We've had that before during COVID. We don't necessarily have it right now, and the lower this goes, like I kind of look at these names where like that you had during COVID and in general when you checked Reddit and talked with anyone in real life, where everyone had a stake basically. And I want to see them staying down, like you said, with like Zoom, for example. If that goes up, like, or like if GME starts going up again, that's a big red flag, I think.
Yeah, maybe my thinking is like super mid. I don't know, but well, I'm almost certain it is. But to me, it doesn't necessarily mean, oh, well, GME and AMC need to move as much as like say down the tail of growth stocks or something that just don't have a lot of real revenue, or the longer tail of the Nasdaq versus just a short tail. The things that people really abandoned because yields were so easy elsewhere, it put stronger demand on future earnings, and therefore growth stocks struggled. So if you start to see the long tail of growth do well, I think that would be a more indicative sign, and maybe an expectation that yields are going to stabilize. Although if you actually look at yields, I mean, good Lord, this still continues to be one of the most impressive charts in the world. This is the 30-year here making monthly highs. Certainly looks like whatever consolidation existed may be going through a continuation motion right now. And that would be inverse to everything I'm talking about. So I really don't know. This is the chart that concerns me the most.
Yeah, it's quite aggressive. And I wonder how that's like, you would think at some point like that this will have like a negative effect on markets, but
I think this would have the most real negative effect on the economy. Like that's where my concern lies here. Is I think this is where things truly can break if we continue to see both a rise in rates, a rise in expected rates.
Yeah, but that also has implications for the markets, right? Like for both.
Absolutely.
Like if the economy just gets fucked, we're not safe in the markets either. But yeah, obviously, I mean, this stuff, and this is why I'm like, it's not that easy to trade right now. I think with all of this, all of these kind of things that you have to know, that I'm way too stupid for. That I'm just like, just give me a market that I can turn off my brain. It's much better than me having to think too much, because that doesn't end well, and that's not how it is right now.
It's really not fair that we have to think about 30-year bond yields and like on-chain rugs in the same conversation.
Yeah. I mean, there's Inus and there's the yields, right? And that's the conversation.
30-year Inu.
Yeah, the world's in a weird place right now. Like, I don't think it's ever been weirder. And that seems like if I could bet on the world getting weirder, that's a bet that I would make all the time.
Okay, we're talking about Zuck and Elon Musk doing a death battle in the Coliseum right now in real life. So, I mean, how weird do you want it to get, Don?
Dude, it feels like it's the peak, but it will never peak. I think it's gonna keep like it's gonna get worse, and then
exponential insanity.
Oh yes, I think everyone's just gonna lose their minds. Like that's the one thing that I would bet on if I could, but there's sadly no vehicle for that one. Besides maybe betting on like, what is it, Sonic Inu, whatever, like the one with Bitcoin as a ticker. Like that's as stupid as it gets. So maybe that's the play.
Finally, an altcoin pick from Don. Let's go.
Oh no! Don't buy
it.
Yeah, call Bitcoin. Don't buy it on my recommendation. I have none, and I will never have any.
What do they call it? The all caps Bitcoin? Like, how do you differentiate it?
Oh yeah, but I think you have to look for the whole name. But I think it's up like 20,000% or something of that nature. So yeah,
Good.
cannot.
Yeah, good old Harry Potter Obama Sonic 10 Inu. Rolls
Oh,
off the tongue.
Oh yeah, Oh yeah. That's kind of the state of the market we're in, and that's why, like last week, we were talking about doing a show, and I was like, I don't know what to talk about because really,
we've managed to talk about price this whole time, but you talk about news, and good gracious, there's tons. There's been tons. It's like the falling apart of Binance and weird Justin Sun stuff, and Sam lost bail. Like there is interesting personnel news out there in the world.
There's news and drama. It's just not moving anything. It's
just
annoying.
I mean, I was always a hater of drama, and I was always a hater of like news. So that's why I'm just too zoomer for that boomer talk, which is news. I just care about price, but I'm down to talk about news if you guys want to.
I really don't care that much.
Fuck it.
I mean, it's not that I don't.
It's all priced in, Ledger. If I want the news, I'll just look at the chart. 5-minute RSI divergence, FBI rating coming. Very straightforward.
I don't even know how to like decipher it down. Like I don't know what's most important. I can't say I've been like paying attention super closely to it myself. But there has been news is the point. And I think a lot of it is stuff that just really isn't that impactful for price, aside from the ETF stuff. I think the ETF stuff is definitely the like big potential cloud or sunburst or whatever that should have an impact on price when there's real resolution. I think there's a little boy called wolf type stuff from the market because we talk about ETFs all the time in crypto markets, and we've never been satisfied. So perhaps we can be lulled into complacency going into a potential spot ETF. And if it is approved, then we'll actually have to figure out what does that mean? Like, are people going to ape our bags, with spot Bitcoin? I think that's the biggest news to really be to take seriously. And I would say we're not really taking it seriously right now.
I think honestly, the resolution, if it's positive, is just going to be a big pump that goes sideways after, when people realize like that's not like the inflows are not as significant as people would think, but it's still like a long-term kind of positive flow.
I think the influence is bigger than Michael Saylor, for example, like bigger than MicroStrategy.
Oh, the guy makes me so bearish that you might be right. No, I mean, I think it's going to be longer term. It's going to have quite an impact. It's just we're going to go to like 60K immediately kind of people that I think are going to get smoked, because I don't think that's necessarily where the market is right now. And if it gets delayed or denied, I think we get a massive nuke, honestly. Like both of those, I think, will lead to quite the downside. If it's denied, which I don't think is going to happen like this time around, as in I think if anything it's going to be delayed, then but if it would be denied, I think like we're properly 20K territory at that point.
Ooh.
Which would be cool to buy, I think. So like there's something to do no matter what comes out of it. Delayed would be the most annoying, just based on the fact that could lead to a nuke that doesn't go too deep. So it's not something that you can necessarily buy. That'd be a little bit annoying, and I think that's the most likely in my head still. But yeah, we'll see how that turns out.
Do we have any closing thoughts? I mean, do y'all want to sign off with something, or do you expect we'll be in the same place, doing the same thing a week from now?
That's probably going to be the same thing in a week.
What about you, Cred?
I think when we finally get vol resolution, you can make more money and there's more opportunity in 1 or 2 days than there have been in the past like 2 months. So as long as you're fresh and well capitalized for those, this will be a blip in your P&L if you get the vol resolution down properly, and you should allocate your focus accordingly, I think.
I'm with you on that and don't have too much to add. It's great being back with y'all, and I'm sorry we don't have like too much news for people. We've been pretty complacent ourselves and willing to skip some of these weeks because we have had stuff going on and a severe lack of stuff to talk about. But you know, fall's coming and summer's near an end, so maybe people will our controllers on Wall Street will get back from their summer vacations and start to move some markets. We'll see, I guess. In the meantime, thanks for joining us, and you know, do all the things, like and subscribe, and we'll catch you next time. Appreciate y'all being here. Fred, Don, good to talk to you both.